All right, hello everyone. Tim Davis coming to you guys with another market review. Going to be taking a look at what markets is showing us by looking at the um SPY and the Q triple Qs, and taking a look at the Russell as well as the diamonds. So I'm looking at all the ETFs. Started by looking at the SPY, and again, as I said on the last market review, like the bears are definitely in control of this market. I want to point out the relationship, the price action as it relates to the moving averages. This red line here, that's my 200-day. This blue line here, that's my 20-day moving average. And the purple line is my 50-day moving average. As you can see, already on a daily price action is below all three moving averages. So with that in mind, just like the bears are definitely in control of this market, and any pivot points are going to act as some type of reversal point. So we can use those as spots of resistance, as support resistance. So looking closely at this particular chart here on the daily chart of the SPY, again, we are below all major moving averages. Now we have all major moving averages trending lower with price action below the 200-day and below the 50 and below, I mean below the 20 and below the 50. Next thing that we are probably going to see happen eventually, probably over the next couple of weeks, is we're probably going to start to see the 20 cross below the 200, and then the 50-day eventually cross below the 200 as well, because the bears are definitely in control of this market. And we'll point out a couple spots here where we could see, and then we are in oversold territory. That's why I wanted to bring up this chart and show you guys the RSI, because we're definitely in oversold territory. So even in a bearish market, you're going to have these strong rallies that are going to probably confuse a lot of folks who don't understand the environment that we're in or technical analysis as well. So let me point out a couple things here. Right here, right on this particular level here, is a level, is almost a role reversal point, which is right around 420 for the SPY. Could we get back up to that level as we trade through, start to trade next week? That is a huge possibility. So we could see a strong rally within the market, but keep in mind that we are still below major moving averages, which is definitely going to act as levels of resistance. So even in a little rally up, price action more likely to run into these moving averages and start to head right back down. So I would say don't get too caught up in the strong rallies that we could see this week. But be ready and be mindful of the moving averages, because they're going to act as more like strong levels of resistance. And we can see that to be true as what happened here. And back around the beginning of October, when price action traded down to the 50, the 20, I'm sorry, the 200-day moving average, and we got that strong bounce. And look what it did. It ran right into the 50-day moving average and eventually traded right back down. It hit a level of resistance, came up, and that level of support came up, looked just a tad bit above that 200-day and hit it right back down below the 200-day. So we probably want to see the same type of action. Something similar to that, more than likely. So again, I do expect some type of rally. We're in oversold territory. Look at the RSI. RSI is well below 30. RSI gets below 30. Start paying attention and looking for a possible rally in the overall indexes. Again, so price action maybe up towards 420. So that's about another $10 on the SPY, possibly. But I look for that to be a quick reversal, more than likely. Probably see a quick reversal. So keep that in mind. That is what we look like for the SPY daily chart. And just a quick glance at the bigger picture. Take a look at the weekly chart. Again, may have a short rally back up to this level of resistance, right around that 420 level before trending lower. And on the weekly chart, if you look, we're hovering right around that 50-day moving average, which was the high on last week. The low is right around that 410. So we could go back up to that high around 420 and then head right back down. That next reversal down, folks, could push price action way down to the 200-day on the weekly chart, which will push price action right around 393, somewhere around there. So keep that in mind, that if we get any rally, expect for it to be met with some fierce resistance and then a sharp reversal. And we could break well below 400 on the SPY once we get that rally, after that rally is over. All right, let's take a look at the triple Qs. Here's the triple Qs daily chart. Again, we can see the same thing here. Roll reversal point right here where we got this little rally, and then we came right back down. So we could see a nice move back up to this point, which is around 355. Let's take a look at it on the daily chart real quick. So again, we could see a move right back up to this level around 355, which would represent where we got a bounce here and came back down. So we can get a move right back up to the level around 355 before seeing a move lower. RSI is in oversold territory as well. Weekly chart, again, show price action. Went up to as high as 360 last week. Then we traded right back down, finished right around 344. So could we see a move back up towards 355, between 355, 360? Yes, that's a huge possibility. Then again, we should reverse quickly and start to challenge lower levels of support right around this 50-day and this 200-day moving average on the weekly. And if we look at the daily chart, hovering just above this 200-day. So again, we could rally from where we are now, back up to around 355, and then see what happens there. We probably want to get a sharp reversal if we do make it to 355 on the triple Qs, and possibly head back down to test this 200-day again, which we probably will end up breaking eventually at some point. Take a look at the diamonds, DIA. Same scenario in oversold territories. And the last time we got an oversold territory around the beginning of first week of October, we got a little rally here. And like I say, it was just a quick rally. So around the beginning of October, middle of October, got a little rally here, back up to the 200-day. And look what happened when we got to that 200-day, traded around that level for a bit, came right back down and broke this previous level of support. So where could we go now? We could, and then this is, the diamonds look a little bit tricky. We could go right back up to this. I wouldn't even give the diamonds too much we'll move higher. Right back up to this 20 period moving average. Right around 330 is a possibility that'll take us right back up to right around this level here, which is a roll reversal point. This level now becomes resistance. That should take us right up to about 330, and we could see price action come right back down along the moving average, starting to curl back lower. So again, we oversold territory, so would not be surprised to see some sort of a bounce as we start the week out. And it could be a significant bounce, but you can't fall in love with that bounce because the bears are still in control, overall control of this market. Weekly chart. So the DIA is not far from this 200-day moving average, which would take price back down towards 318. 318. So again, we could see some type of bounce here, and then a reversal right back down to test this 200-day moving average and probably take it out on the weekly. Now let's take a look at the IWM, which is the ETF for the Russell. This has been the weakest of the bunch. And again, with the Russell, we could see some sort of bounce. Let's take a look at the daily chart real quick. So the Russell, we could see some sort of bounce. Maybe back up to around this 168 level, which is where we have some level of resistance. That will take price action right up towards this 200, that's 20 per moving average. So we can see a Russell go up to at least around at 168 before running into this 20 per moving average. As price action starts to rise, I do expect the moving averages start to continue lower. And for price action to run into these moving averages and then start to reverse again. So that's where we stand as the markets look right now in our major moving averages. And here's a weekly chart of IWM. It's definitely an oversold territory. So again, we would not be surprised to see some sort of a bounce here. Here's a quick monthly look at the monthly chart. Looks like the monthly chart is definitely showing us some weakness here, with the 20-period moving average starting to cross below the 50-day. Definitely bearish move, a long-term move for the overall market. So the next couple of months is probably going to be very detrimental for the IWM, for the Russell 2000. Let's take a quick look at the VIX while we're here. So here's the VIX monthly chart, and as you can see, it's liftoff. It's liftoff, folks, for the VIX on the monthly chart. So longer term picture looks very, very bullish for the VIX, which is not good for our markets over the next several months or so. Bring us back down to current events. The VIX is well above its major moving averages. So we could see definitely could see the VIX pull back to this 20-period moving average, right around 19, before we see some type of big move higher. Or if we can get to 19, we could see right a little bit below 20. So we could see move a little bit below 20 before we get the next move higher. Yeah, you can see on the weekly chart that the VIX definitely ran into that wall of resistance right at 200-day moving average. So again, do expect to see the VIX pull back here at some point, maybe around back down here to the bottom of this wick, maybe around the lower below 20, possibly. Then we have to see what happens then. I think we'll be out of overbought territory on the VIX. Then I think we can march right back up in a major way. So keep that in mind. Okay, folks, I think that is all that I had to offer. Let's take a look at one more thing. Sentiment tool, SPXA 200R. This is the tool that tracks the stocks trading above the 200-day moving average. I'm going to switch this to a quick daily chart. So here's this tool pretty much shows you the percentage of stocks trading above the 200-day moving average. And right now, as of Friday, we closed at around 23%. So 23% of stocks still above the 200-day moving average, which means it's well over 70% that are not. So we could see a definite bounce in the sentiment tool, for the market. Maybe back up to around 30, right around this 20-period moving average, where we see some type of reversal. So we definitely, the breadth of the market is definitely in big time favor of the bears, with a big negative sentiment of the market. Unless we get back above 50%, the bears are going to be still, we're going to remain in control of this market. All right, folks. So hopefully this is some information that you guys can use. Hopefully to see you guys, will be with you guys sometime in the midweek to see what price action is showing us by that time. Till then, enjoy the rest of your day and enjoy the beginning of your trading week.